If you've been paying attention to the markets right now, there's one thing you absolutely can't miss: semiconductors are on fire. Not just warming up, not crawling back, but charging ahead with real momentum. In April 2025, global chip sales hit an impressive $57 billion, according to the Semiconductor Industry Association. That's a 2.5% jump from March and a 22.7% surge year-over-year. And this isn't some one-off recovery, it's happening across the board. The semiconductor supply chain is finally stabilizing, capital investment is rising again, and a whole new wave of products is hitting the pipeline. Now let's break down the companies making moves in this space, because some of these plays could define the next chapter of AI and computing. GlobalFoundries is turning heads after announcing plans to acquire MIPS, a long-time CPU design powerhouse. This isn't just another corporate deal. It's a strategic leap to strengthen GlobalFoundries' position in AI, edge computing, and next-gen data centers. MIPS has been building RISC-based CPUs for decades, technology that's foundational to modern computing. By bringing that intellectual property in-house, GlobalFoundries can design energy-efficient, scalable processors tailored for the AI era. This signals a bigger trend across the chip industry. Foundries aren't satisfied with just manufacturing anymore, they want to control the innovation pipeline. With their MIPS acquisition, GlobalFoundries shifts from being a supplier to becoming an end-to-end tech powerhouse. That could unlock major growth as demand for faster, smarter chips keeps climbing. Quick thought: if AI is the gold rush, are companies like GFS the ones selling the shovels? Analysts at Stifel just raised their price target on MTSI from $140 to $155, keeping a buy rating. The stock trades around $137, which points to upside potential. But this isn't just about ratings. Analysts believe the long semiconductor inventory correction is finally behind us. That's a game changer. MACOM specializes in high-performance RF, microwave, and photonics semiconductors, critical components for data centers, 5G, and AI infrastructure. Stifel projects revenue growth of 32% in 2025 and 17% in 2026 for companies in this niche. In other words, MACOM could be one of the quiet winners of the AI infrastructure boom. Morgan Stanley recently bumped their price target on ADI from $212 to $273, about a 15% upside from where it trades today. Why the optimism? Analog Devices has carved out a niche in high-performance analog and mixed-signal chips. These aren't the kind of chips you find everywhere, they're used in industrial robots, autonomous vehicles, and 5G towers. What sets ADI apart is precision and reliability. They're not chasing mass production. They're focused on mission-critical systems that demand real-time accuracy. As industries race toward automation, electrification, and AI integration, ADI's expertise becomes even more valuable. Add a strong balance sheet and healthy cash flow, and you've got a company built to weather short-term shocks while doubling down on long-term innovation. For investors, ADI represents dependable growth with high-tech precision. Now let's zoom in on the company that doesn't just participate in the chip boom, it makes it possible: ASML. ASML is the only company in the world that produces lithography machines, the incredibly complex systems used to manufacture today's most advanced chips. Without ASML, chip makers like TSMC and Intel couldn't even build cutting-edge processors. Recently, analysts raised their price target to $761, though they kept a hold rating because of short-term order softness. But let's be honest, ASML's dominance is untouchable. Every time innovation moves forward in semiconductors, ASML gets paid. With demand for AI, high-performance computing, and data centers still climbing, ASML remains one of the most critical players in the ecosystem. UBS just lifted their price target on Qualcomm to $165, while the stock trades near $157. Short-term earnings may get a boost from early shipments driven by trade uncertainty, but analysts don't expect that to last. The real story is Qualcomm's transformation. They're not just the smartphone chip company anymore. Qualcomm is expanding into, their technology powers everything from smartphones to self-driving cars. The momentum isn't red hot right now, but the long-term strategy is solid. For patient investors, Qualcomm's diversification could pay off. Applied Materials is a name that often flies under the radar, but it's absolutely vital to the chip-making ecosystem. Analysts just boosted their price target to $240, suggesting nearly 28% upside. The reasoning? Spending on wafer fabrication equipment is ramping up again, and Applied has a massive order backlog. This company is deeply tied to both logic and memory chip production, positioning it perfectly for the next wave of investment. As governments push for domestic chip production and AI accelerates demand, Applied Materials is in the right place at the right time. Finally, let's talk about Micron. Analysts just raised their target price to $150, a whopping 38% above current levels. Why the optimism? Because Micron sits right in the sweet spot of AI and hyperscale data centers. Their memory chips are essential for training and running massive AI models, and demand is rising fast. The memory market is rebalancing, prices are climbing, and margins are improving. As tech giants race to expand AI infrastructure, Micron's next-gen memory will be front and center. For investors, Micron is one of the most direct plays on the future of AI computing. Let's put the numbers side by side. So, whether you're hunting for high EPS, fat margins, or just a good entry price, the semiconductor sector is loaded with opportunities. Each stock tells a different story. Some are about precision and resilience, others about growth potential or critical market dominance. The question now is, are we still early in this rally, or are we showing up late to the party? Drop your thoughts, because the smart investors out there know one thing: when chips are hot, you don't just watch the game, you get in the game.